we got to talk about Bitcoin. So Bitcoin flushed yesterday, piercing 25,000. We're going to take this purely from a chart and data perspective. Now, again, you guys know I've been generally bearish since we were at 31 to 32,000. I was one of the only people saying, no, it's not going to break out. This is massive resistance here. We're going to actually sell off and come back in. Well, that's exactly what we did. Take a look at this. Here was the Ripple news, the pop, and the reversal right back down. All right, this was your BlackRock news, which, by the way, is the low that we hit yesterday. And we rallied, and then we lost it over here with this move down. Now, over here was your Grayscale news. Up big one day, and then in 2 days, it came right back in. So what we're seeing is this pattern of Bitcoin popping, and then especially Ripple and Grayscale, the good news there, and the chart came right back in. If you look at the price action, right? So if we look at this price action here, this is just zooming into the chart. This is yesterday, and this is today. What do you guys notice about this? We had a down move, and in 1 day, we reversed it right back to the upside. All right, so the reason why that's catching my attention is just like, and again, this is the key, is you want to be bearish when the charts tell you to be bearish. You want to be bullish when the charts tell you to be bullish. In the short term, this move down here has been reversed. This is the opposite of this. This was a bearish signal. That was a bearish signal. The Ripple move was a bearish signal, and it worked out. This is now a short-term bullish signal on Bitcoin. Right now, we've reversed the down move. That puts a short-term low in Bitcoin, and therefore, on a technical basis, you have to switch to a near-term bullish bias. In addition, we know that you hit a double bottom here, right? So we have a classic little pivot low right there, and that was tagged right there. We can draw a trend line right in that vicinity and gives us that double bottom. So again, this is my point, folks. I am neither a bull nor a bear in terms of being a perma-bull or perma-bear. The charts are what tell me what to do. And again, they don't tell me 100%. They tell me probability-wise. So they tell me 70, 80% chance this is what's the coming move on the chart. If I see a good setup, it tells me there's a 7 out of 10 chance that it's going to go in the direction I think, and that's great. That's that's Hall of Fame numbers. It still means 3 out of 10 times it's not going to work. You have to know when it's failed, and you have to adjust. So short term, now by the way, I still think Bitcoin is going lower net over the next couple months, but short term, you can't deny that that is a bullish signal on Bitcoin. Let's take a look at the US dollar. Now, the US dollar, guys, is continuing to show some amazing stuff here. We are trading in a channel range, right? So again, let me get rid of that there. All right, so essentially what we have in this situation is the US dollar, after topping out here, it fell sharply, and we're now trading, and we have this trend line to guide us. Now, again, what this is telling me is that the dollar is probably closer to the highs of the chart, because, yeah, it could go up a little bit more, maybe 105.50 from 104.88 where it currently sits. But the downside is the most likely candidate over the next 3, 6, 9 weeks, months, whatever you want to call it. Again, this is pattern. Please understand this pattern. This pattern, what I would refer to as a bearish wedge pattern. Down move here, and essentially you have this line and this line. All right? Again, look at the flag. Essentially makes a flag right here, just upside down. There's your stars, etc., stripes, whatever you want to call it. There's your flag pattern. That's where bear and bull flag come into play. Wedge patterns are essentially just kind of consolidation phases within a bigger move. And that's exactly what you're seeing here. Bigger move, here's your consolidation. My guess is eventually we head down here, and eventually we break lower. If you think about the US economy, that the Fed is going to keep the pedal to the metal and keep rates higher for longer like it looks like they're going to do, then this makes sense. Eventually the economy breaks, the dollar begins to fall because eventually the Fed has to lower rates and start printing money again. If we think about $1 trillion plus in interest on our debt alone, $1 trillion in credit card debt, defaults skyrocketing, the writing's on the wall. Like literally it's on the wall of what is the outcome here. The outcome here is a recession. It's just a matter of how bad of a recession it will be, and that will likely accompany a weaker dollar because the Fed will have to go back to money printing. All right, quickly jumping over here, guys. Let's continue on our merry way. Let's take a look at the potential here for tops in the market. Could this market get back to an all-time high? And the big question here is, what type of top are we making in the market? Are we making a Bitcoin top where we made a higher high before the rollover on the S&P 500? Or are we going to do a top like the NASDAQ in 1999 to 2000 where it had a lower high? So again, that's something I'm paying very close attention to, right? Because to me, it doesn't matter. If we go and make a new high, it's just a double top until proven otherwise, just like on Bitcoin. And again, if we flip over to Bitcoin, what I mean by that, let's go over here to Bitcoin's chart. In fact, I think I have it up right here. There we go. I'm even going to erase that. But here's your Bitcoin chart, right? This was your top on Bitcoin. Up, down, up, higher high, okay? And then the down. And essentially, if you looked at the RSI, and I went over this last week in the videos, we saw negative divergences. Negative divergences. So here was your one type of cycle top occurs with an M top with a slightly higher high. The reason the high is higher, because it has to stop out the last few shorts on the breakup. So stops will be right at that double top here. It pushes just above so that those stops get taken out, and it convinces all the remaining bulls to go long, right? Or I shouldn't say bulls, any bears that were on the fence, it's going to push them to go long. So ultimately, that's one sort of top that we have to pay attention to. That is a possibility for the S&P 500. It is. I don't think it's a likely probability or possibility, but it is a possibility. The other type could be something like on the NASDAQ chart here. And let me go to my weekly chart. So essentially, this is your NASDAQ chart, and I'm going to go all the way back. Bear with me here. Got to go all the way back. In fact, all right. So basically what we have here is the NASDAQ, and the NASDAQ chart, if you look at this 2000 period, and again, it might be a little bit tight to look at. So basically what we have here is this insane move. And by the way, does this not look like the COVID drop before the vertical move that we experienced? Like, look at that right there. Then you have the big fall, the retrace, and then the big fall. So this is the second sort of cycle high. This is what the NASDAQ and the S&P look like right now, but you could always see it move back to the upside. Let's take a look at the current chart of the NASDAQ. So here, essentially, you have much the same, where here was your COVID drop, then the vertical move, and then this retrace right here. And so the question I have is, are we going to go to double top and pierce it like Bitcoin and like some other cycles, which creates an M top, or are we going to do what we did in 2000 and go like that?